Good morning. Welcome to the midweek edition of Business Morning here on Channels Television. It's time to do business for 55 minutes, and it promises to be worth your time. I'm Ini John Mekwa. Let's start off with oil prices. Just a little changed on Wednesday as a larger than expected draw in U.S. crude stocks offset worries about rising COVID-19 cases in top oil importer China. Brent crude futures rose 7 cents to $80.06 a barrel, while U.S. West Texas Intermediate crude futures gained 4 cents to $76.27. Gasoline inventories rose by about 4.5 million barrels, while distillate stocks rose by 828,000 barrels. However, growing worries about a surge in COVID-19 cases in China as the country begins dismantling its strict zero COVID policy has kept oil prices from moving even higher. Commodities now. Chicago soybean futures rose today with a lack of rains in Argentina underpinning the market, although slowing U.S. sales to China limited gains. Wheat rose on concerns over crop damage in the United States. The most active soybean contracts on the Chicago Board of Trade rose by 0.1% to $14.79, half a bushel. Wheat added 0.4% to $7.53 for 3/4 a bushel, and corn gained 0.2% to $6.53 a bushel. Argentina, the world's leading exporter of processed soy, has been hit by historic droughts that has prevented many farmers from planting. Brazil, which is the world's biggest soybean exporter, is far less impacted by dry conditions and is expected to begin harvesting soybeans by late January. China's November soybean imports from the United States fell by 6.9% from a year earlier after low U.S. river levels slowed shipping of beans to ports for export. The world's biggest soybean buyer, China, imported 3.38 million tons of oilseed from the United States last month, and that's down from 3.6 million tons a year earlier. And this information is according to the General Administration of Customs. Now, looking at wheat now, temperatures in the United States is dropping well below freezing and could damage winter wheat crops in parts of the Great Plains that haven't received protective snow cover. Let's come to Nigeria. Now, the Director General of the Bureau for Public Enterprises, Alex Oko, has reiterated government's plan for the sale of redundant assets to fund the nation's 2023 budget. He was speaking at a meeting with reporters in the Federal Capital Territory. Mr. Oko explained that the proceeds from the sale will be distributed to the federal and state government at 47% and 53% each.
The expectation in the fiscal plan for 2023 is 260 billion. You're right. And the key assets that we're looking at are the power assets for 2023. 5 of the NIPP plans, incidentally, we are reaching some understanding with the state governors for the sale of those 5 power plants. And that's what has really dragged, you're right, that's what has dragged this transaction for at least for the past 2 years. Just getting a common stakeholder understanding on the critical need to realize value from those assets now before they depreciate beyond value. Thankfully, last week we were able to resolve the issues with the governors. So for those assets, we're likely to reach financial opening of the bids before the end of the year, which is maybe next week, right? But the proceeds itself will come in the first quarter of next year. So we actually project that, in the first quarter of next year, we'll be able to exceed the expectation of the budget for 260 billion. By March, we should have done that.
Well, talking about the 2023 budget financing, the issue of debt and the macroeconomy in Nigeria. The World Bank has projected that the Nigerian economy is estimated to grow by 3.1% in 2022 and to grow by 2.9%. That's less than what is projected for this year. For next year, 2023. They've also said that the outlook remains highly uncertain. The institution has warned about a potential fiscal time bomb, that's what they call it, except urgent reforms to fix the government's ailing finances implemented. The World Bank, in its latest Nigeria Development Update, outlines measures that the country needs to take to defuse that time bomb they talked about, and that includes petrol subsidy removal, restructuring of the debts, and the central bank some of the central bank's moves. But we have the country director of World Bank now joining us to help us elaborate on that report that they shared last week and some of the way forward. The country director for Nigeria from the World Bank is Mr. Shubham Chowdhury, joining us from our Abuja studio. Good morning, Mr. Chowdhury. Thank you so much for your time this morning.
Good morning, Ine. Thank you for having me.
Great. So just before we delve into the details of that report that you have already shared, we're interested to know, we hear, especially African countries, just yesterday, I think Kenya got from IMF, what is the interest rate for loans when they're given to African countries? And then what is the interest rate for the developed economies?
So to get a full sense of this, I think first, the World Bank prices our financing based on the income levels of countries. So it's not Africa per se, it's really what is the income level. So within Africa, South Africa would have a higher rate than, say, Nigeria. The two main windows are what we call the International Development Association, IDA window, which is concessional financing, which Nigeria is eligible for. And then there's the window is the IBRD, International Bank for Reconstruction and Development, which is primarily meant for middle-income countries. But actually, Nigeria also qualifies for that because Nigeria is a lower middle-income country and has access to commercial debt. So the concessional window, which is primarily what Nigeria's financing is coming from, right now is about loans with about 38-year terms, 6-year grace period, and somewhere between around 32 years repayment period. And the interest rate right now, I believe, these are updated every quarter, is about 2.7% per year. Now, so those are obviously highly concessional relative to, say, and these are US dollar denominated loans. It's also possible to get it in other currency, but Nigeria has historically chosen to access in terms of dollars. Now, I want to emphasize that, look, all of this is kind of standard. It's agreed by our shareholders. It does not differ from country to country, except for this basic income level criteria. And it does not differ from particular credit to credit, right? And it's all on our websites. Either you can go to the International Development Association website, or you can go to the World Bank website and go to the Treasury page. So, there's full disclosure, and then the terms are really standard terms, and they're revised from time to time based on how markets move, but otherwise they're not project specific.
The perception that these financial institutions, majorly World Bank and IMF, that you seem to be helping a country, especially developing countries, but the conditions you give doesn't really make it look like real help.
So look, I've been asked this question many times, especially in the last few weeks. I'm not quite sure why. I think it's because we've been talking about petrol subsidies. But let me just put it to you this way. Over the last 3 years, or actually last 2.5 years, our board has committed financing of over $9.2 billion that is available to Nigeria. And all of that financing is for things like primary health care, energy access for rural households, for basic education, for keeping adolescent girls in school, for helping to rehabilitate rural roads. So, and actually even to help with the rollout of the national identity number, the NINs, across the nation in a this digital ID in a robust way. All of those, our policies apply, but those policies are ones that I think all Nigerians would want us to apply, which is that the funds should be used for the purposes that they were intended in a way that benefits the Nigerian people. So we have fiduciary rules and policies. We have rules about procurement, which make sure that the procurements are transparent, are competitive. And we have rules about environmental and safeguards policies to make sure that in the process of implementing these programs, these are government programs that we happen to be financing, that ordinary citizens, communities are not hurt by them. So you could call them conditions. I see them as things that ordinary Nigerians would want us to hold government to account for. Now, there's a separate set of things, which is when we talk about PMS, petroleum subsidy removal, why that's necessary. Actually, this hasn't been a condition so far. This is just part of our advice. I mean, we're here to support Nigeria. And the way I put it, things like primary healthcare, basic education, we're happy to help. But really, these funds should be coming from the Nigerian government themselves. To the extent possible, Nigeria should not have to get debt financing from outside the country, even if it's concessional, if it has the resources within the country to finance these basic services. And that's the point about PMS. Right now, PMS removal or phase out is not linked to any financing. None of the $9.2 billion that I mentioned is linked to conditionality, except for the kinds of things that I talked about, which is making sure that those funds are used for the purposes they were intended.
Yeah, actually, I was thinking of the condition of, sometimes asking countries to devalue their currency, to be able to access some of those facilities. Was conditioned like that. I was thinking about the petrol subsidy. I think we'll get to that. But sometimes countries are being given this kind of a condition, which a lot of people think it will, inadvertently harm the economy. Even though it seems they are receiving assistance from the financial institution.
So on this one, let me be clear. The kinds of things that I've mentioned, the $9.2 billion that our board has committed, I've just described what those are for, what they're meant to be used for, and what kinds of, I call them policies or mutual accountability terms that are linked to those. I hope that you and your audience and your viewers and ordinary people would agree that we should have those kinds of accountability built into our financing, so that we can both reassure the Nigerian people who say, oh, you're just adding to Nigeria's debt, and also our shareholders, Nigeria as a shareholder, that look, these funds, these concessional funds that are coming from taxpayers all over the world and from recycling the World Bank's own resources, that these are being spent for the kinds of things that we think will help Nigeria eliminate poverty and help make lives better for all its citizens. Now, there's a separate type of financing, which is often associated with IMF, or in our case, with what we call development policy financing, which is, it's untied, meaning the government can use those funds in any way it chooses. And it's there that often you hear this talk that, look, if we're going to be providing untied financing for the government's budget, then we would like to make sure that the government itself, that Nigeria itself is doing all it can to help itself. So, for example, if we were going to be providing untied financing, meaning it's not linked to any particular use like keeping adolescent girls in school, then we would say to the government, look, we are happy to help, but you can help yourselves as well by phasing out PMS subsidies and using, it's going to be 5 trillion or 6 trillion naira this year, to use those funds towards financing adolescent girls, keeping them in school, towards, providing a basic safety net for all of Nigeria's citizens. So that's where often you will hear this talk about policies being linked to untied financing. At the moment, anything you've heard me say or our team say about PMS subsidies, these are honestly just suggestions. we would like to have a conversation. And certainly the choice is not going to be ours at the end. It's going to be Nigeria's choice, certainly the political leaders, but in some sense, all stakeholders, including ordinary citizens, have to agree that this makes sense.
True word, Mr. Chaudhry. But it's also important for you to know that it's not just you, the World Bank, that is advising Nigeria to take off the subsidy. A lot of Nigerians have looked at the reality and the fact that funding the subsidy is a heavy burden on the country, and it's also affecting our debt servicing, which has gone beyond the revenue now. But from your expert eyes and your findings, because the truth is, the government is aware that the subsidy should be removed, but the social impacts, what it would do to transportation, what it would do to prices of food, what it would do to inflation, I mean, has been a hurdle or a discouraging factor, you know, to the implementation of the removal of the subsidy. So if you were to advise now, how do you see that aspect being, that's the spillover effect of removal of subsidy, how do you see it being handled so the harshness or the hardship is not too much on the people?
Now, look, you're absolutely right. Taking a major move like this, where, you know, for years, for decades, the price of something has been subsidized, you know, and then to say we have to remove the subsidy now has to be thought through. There has to be a conversation about how ordinary Nigerians can be best protected, or at least the kind of the costs of this can be cushioned, that they can be cushioned from the costs of this. But let me just point out that in some sense, already ordinary Nigerians are facing the cost of this. I don't know too many people who are able to get access to PMS at the 175 naira per liter or whatever the latest regulated price is. Most people I talk to, including, frankly, drivers in our office, you know, who don't have the time to stand in queue for, you know, 8 hours sometimes waiting to get PMS at 175 naira, they're having to go out and they're paying 280, even 300 naira per liter. So let's just recognize that some of the costs of having this subsidy in place are already being borne by ordinary Nigerians, okay? But having said that, I do agree, we all agree, and including, you know, as you said, there seems to be a sort of a consensus that Nigeria cannot sustain PMS subsidies, but you know, we have to think through how can poor and ordinary Nigerians be cushioned from the effect of removing these subsidies. In other countries, there have been solutions like offering targeted cash transfers, say to the bottom half of the population, over a period of time to help them cope with the fact that there might be a spike in inflation in the cost of various things as PMS is phased out. Do keep in mind, though, that a lot of the impact of rising oil prices has already been felt by the economy, a lot of the rising inflation. Diesel is not subsidized or regulated in any way, and you know diesel is responsible for much of the transport costs. Kerosene, which is the fuel of the poor, kerosene is not subsidized in Nigeria. So, and the price of kerosene has gone up. So already that has been felt by many Nigerians. So PMS is the one thing that has been subsidized. It happens to benefit mostly rich Nigerians, and frankly, it mostly benefits those who are able to take advantage of arbitrage opportunities and, you know, smuggle the product across the border. But right now, if you raise the price of PMS, the cost of living for ordinary Nigerians is likely to go up. We don't think it'll go up as much as some people fear, but to anticipate that, we're encouraging a conversation about how, you know, ordinary Nigerians can be cushioned against that. Maybe there are ways of, as I said, rolling out cash transfers that get directly to Nigerians, ordinary Nigerians. There might be some ways of ensuring that the cost of public transport doesn't go up. And I think the most important part of the conversation has to be to restore the faith of ordinary people that, look, that 6 trillion naira that is no longer going to go towards PMS subsidies will be used in a way that directly benefits them. So whether making sure that primary healthcare facilities have medicine, or that schools have textbooks, or that rural roads are maintained, right? So the benefit will come in other ways as well, but that too needs a conversation between the political leaders and the population at large. You're absolutely right that it seems like all parties or most people have agreed here in Nigeria that something needs to be done. And all we're saying is saying, look, we agree, let's start the conversation.
All right, just before we let you go, Mr. Chaudhary, and this is really important because it's like the biggest elephant in the room here in Nigeria, the issue of exchange rates. And we do know that a high level of the inflation Nigerian economy is facing is imported because Nigeria is very import dependent. And so because of the exchange rate, that is a problem. How does the World Bank envisage this issue being solved? The fact that there's supply issue, that's on the one hand, and then the multiple exchange rates, you know, in the country, that has also contributed. What is a possible way out?
Okay, so let me say three things on this. First, just to recognize it is a tough problem because anytime you have an imbalance between demand and supply, you know, so you're going to have to manage that imbalance, right? So right now there is excess demand for foreign currency and there's not enough supply of foreign currency coming in. The fact that with oil prices being that high, the supply of foreign currency coming in has not, you know, kind of kept up is worrying, and it's something to think about. Now, how does one usually reconcile, you know, mismatch between demand and supply? You let the price of the thing that's scarce, in this case, foreign currency, you let the price of that rise, okay? So that would be like allowing the Naira to depreciate. Now, there are all kinds of reasons why you don't want that depreciation to be very large or sudden. So that we understand. What I think what we've been saying, including to the CBN, obviously, and publicly, is that, look, we're not saying let the Naira be completely at the mercy of market forces, but we are saying that there has to be some way of recognizing and responding to the market imbalance that's there. It's kind of like a pressure cooker. You know, pressure cookers have release valves, you know, so that the pressure doesn't build up. That's what we are primarily saying. Allow some price discovery in the INE window, which is the investors and exporters window, which is supposed to be the main vehicle where currency gets traded. Allow some, you know, willing buyer, willing seller price discovery. You know, how much are, you know, people who need US dollars willing to pay for it? Unless that happens, you see all of the pressure building up in the parallel market, which is what has happened. You know what the parallel market rate is right now, somewhere upwards of 750 or 760 Naira per dollar, whereas the official rate is still somewhere around 440 or 450. I forget exactly what. And that pressure, in a sense, is the kind of pressure that builds up inside a pressure cooker. So our contention is, if you allow some price discovery in the INE window, that will have two impacts. It will kind of reduce some of the pressure in the parallel market. It will actually encourage people to supply FX to the INE window, which now you will know most firms and certainly individuals are hesitant to do. And third, it will actually help with inflation. Because if you look at what's happened to inflation, especially take a look at the period in 2016 and 2017, inflation went up and basically tracked the parallel market rate. Because most businesses, somehow, if they need dollars, they have to go and get the dollars in the parallel market rate. So the fact that the official exchange rate has been kept stable has not actually helped keep inflation down. So that's essentially what we've been saying for a while. But I do understand that it's something that, you know, everyone's worried that, look, if we let the kind of official exchange rate start to depreciate, it opens up a whole can of worms. And we're saying, look, so put in some measures to keep that depreciation from being too sudden or too sharp, but allow some price discovery, let some of the pressure off.
All right, thank you so much. Really getting into the next segment. Thank you so much, Country Director with World Bank, Mr. Shubham Chaudhary, for your time this morning. We
Thank
do
you.
hope we'll be able to get audience with you anytime soon, to clarify some of those other issues that we have
I'm
not.
here in Abuja, so whenever.
All right, okay, that's great. All right, that was building on the report of the World Bank on Nigeria and the economy, especially as elections are getting really close. We hope to get him back, especially to talk about the impact of the election. Now, let's take a short break. When we are back, it's AFEX time. That's right, it's AFEX time here in Business Morning on Channels Television. And for the week ended the 19th of December 2022, turnover increased by almost 45%. And that put the AFEX commodity market summary mostly in the green. We have details now with Omotola Akongbe, market data and research analyst with AFEX. Hi, Omotola, can we have the details?
Hi, good morning. Like you said, it was a mixed performance across most of our key indicators. There was an increase of 45% in total turnover, increasing from 5 billion naira to close at, increasing from 3.5 billion naira to close at 5 billion naira. Also, there was an increase of 2.5% in total volume traded, increasing from about 11.6 million contracts, 11.3 million contracts to close at 11.6 million contracts. There was, however, a decline of about 24% in number of deals, declining from 319 deals to close at 242 deals. The AFEX Commodity Index witnessed an increase of 1.4% in its index points, moving from 455.71 index points to close the week at 462 index points. The AFEX export index, however, declined by 3.9%, declining from about 233 index points to close at 224 index points. Across volumes of contracts traded during the week, there was an increase in the volume of soybean, paddy rice, cocoa, and cashew traded. Across our price, there was an increase of 1.18% in the price of paddy rice to close the week at 311.88 naira per kilogram. There was, however, a marginal decline of 0.26% in the price of maize to close the week at 235.88 naira per kilogram. There was also a decline of 8.13% in the price of soybean to close the week at 313 naira.89 kilogram. There was a decline of 20.72% in the price of cocoa to close the week at 1,506.40 naira per kilogram. There was a marginal decline in the price of cashew nuts by 0.01% to close the week at 628.48 naira per kilogram. The prices of other commodities remain flat. For more information about AFEX, you can visit our website at africaexchange.com. And to trade commodities, you can download COMEX on Play Store or Apple Store.
All right, Omotola, thank you so much for giving us the details of how the market traded the 19th of December. Now, still staying with AFEX, the Nigerian economy has seen a lot of economic slowdown as other economies also in the world at this time. And we've witnessed double-digit inflation, scarcity of foreign exchange, just as we discussed, and a hike in monetary policy, which has led it to about 15.5%. With these factors affecting both the global and local space, there's a dire need to embrace alternative investments as a hedge for investing in a changing market environment. Over the years, institutional investors have taken advantage of these opportunities and opened alternatives to the equities market for their clients. Since the first initiation of the FETC in 2020, capital market operators have taken advantage of the returns for their clients, and tell you how you can take advantage of that. We have joining us for that conversation Ismail Yahaya, Asset Management Marble Capital Limited, to tell us that. Hi, good morning, Mr. Yahaya. Thank you for your time this morning.
Good morning. Thank you for having me.
So since the FETC was made available in 2020, Marble Capital has used it in the financial market How has it been? How has the reaction, perception been, and how has it stood out in the market?
Thank you. The FETC was launched 2020, right? And at the first iteration, the performance was about 68% return on investment. We found out that, and that was basically because of the bullish trend after the COVID-19 pandemic, right? In 2021, there were two variants that were released. That was the first one made about 31%. The second was about 20%. So we've seen a good return on investment for investors over this 3-year period. I mean, there's that minimum expectation that the performance will be between 13–15%, but it has always beaten that performance.
So tell us, as a financial advisor, what is this given to, I mean, especially at a time like this when investors are looking for a hedge, where to keep their money and be covered from inflation and some of these harsh realities. What is it offering? What is FETC offering to your clients?
Okay, so the FETC, as a fair trade exchange traded commodity, can be compared to what we understand as exchange traded funds in the equity space, right? It gives you access to fixed returns on commodities trading with the likes of, it's a basket of commodities, a mix of maize, sorghum, soybeans, and paddy rice, and in different percentages. So it exposes you to the performance of this across board over a 70-day period. I think for clients, it's a good way to diversify your investments or alternative forms of funds or portfolios for you.
And how will you describe the FETC to other capital market operators? Why do you think they need to come on board? Why should they come on board?
That's an easy because you find out that every capital market operator is trying to, our goal is to ensure we give clients good returns on their investments. We ensure that they can, as much as possible, protect their capital. So for every capital market operator that want to consider investing in FETC, it's a good way to diversify your portfolio, to go to move away a bit from the conventional instruments, the sukuk from an Islamic finance perspective, the bonds or the equities, to invest more in alternative investments, commodities that have a direct impact on the economy. So it's interesting for any fund manager or capital market operator to want to consider this as a good form of asset class to invest in.
But I have to warn you, the yields are growing now, so you have competition in the fixed income market, you know.
Yeah, well, that's what fund managers want to take advantage of, to balance everything, right? To ensure that we're able to earn good returns across board.
All right, thank you so much, Ismail Yahaya, Asset Management with Marble Capital Limited. Enjoy the rest of your day.
Thank you very much.
Let's take a breather, and then we'll head to that market that I just talked about, the fixed income market, the money market. So now let's head to that market and find out if really the yields are still growing, and if the equities, I know yesterday, well, I think Anite is here. Anite, thank you so much for joining us, Anite. I did tell the last guest that in the fixed income space, the yields are growing, and that's competition to the FETC. So they shouldn't just think that it's just the FETC that can be a hedge at this time.
Yes, of course, any investors always look for that hedge for their investments, particularly when you look at, rising inflation. So, and I think you might be right, but at the same time, the fixed income markets
didn't look so good yesterday.
Yeah, no, actually, it was bullish sentiment, but of course, because of some other factors, so you can't expect it to continue being bullish.
No market is permanently bullish.
No market, but at least the equities market has been able to give us that bullish promise.
But yesterday was very close.
It was a flattish.
It was
very, very
too close. Yes, very close shave.
Yeah, because investors are really, trying to take advantage of the gains at the same time. But at the same time, they want to limit the losses. So that's one of the reasons why the markets managed to close in the green. So I'll be giving you that number.
All right.
So for our equities market, Tuesday's trading session, it was not in percentage term, because in percentage term, you go by multiple zeros. But what you had was a 1.22 basis points increase on the market's total value, the key indicator of stocks performance on the Nigerian Exchange Limited. 49,416.18 points. That's the index figure for Tuesday, and that's against the 0.20% gain that we had on Monday. In valuation terms, we had over 662.36 billion naira added to the market, and it's still within, just close to the corridors of the 27 trillion naira level. Now let's move over to the sectoral counter. It was a squarely mixed picture, as you can see here. The likes of GTCO, Zenith Bank, as well as Fidelity Bank, they were able to make the counter to be more than a quarter of a percent increase for the banking sector counter, and which counted the losses from FBN Holdings, as well as the consumer goods sector. Well, it was in the red, but that's no thanks to profit taking from Nigerian breweries, international breweries, PZ Customs, and some other key components on that counter. But when you look at the oil and gas sector of the NGX, we had a decline from Oando, but that decline didn't affect the market. That's because Ardova was able to counter that loss from another oil major on that market. Now, looking over to the activity chart, you can see there the only red that we had was on the volume of shares, which is up by more than 30%. But take a look at the board there. For the value, down 2.24%, while for the deals, it's down by 2.33%. For Tuesday. For today's trading session, the market is just about opening, so we have a delayed timing, but we're still expecting that bullish sentiment to continue, but by a very slim margin. Now, let's move over to the smaller unlisted securities market. For the smaller unlisted securities market, yes, we had an additional gain from what we had on Monday. We had a 0.02% increase, but as at the close of Tuesday's trading session, it inched higher by another marginal but higher margin compared to what you had on Monday, 0.06%. And for the total value, it's up by just a small 2.03 million naira. Let's move over to the activity part of that market. In terms of activity, it was up 165.21%, as you can see on the board there. Value also up in the green, as well as the deals. Now, the reason why that market was on the upside was because of Friesland Campina. Its security price was up by 0.44%, and its security price closed at 66 naira 29 kobo. Now, for the top trades on that market, what we had was the Central Securities Clearing System PLC, which had 40,000 units traded. Now, we will be talking about the fixed income market, and to tell us more about the fixed income market, we will be having Chioma Udu, if she's there, so we can speak with her about that market. But for the bonds market, it was bullish sentiment. Average yield there contracted by 6 basis points to 13.33%. Now, average yield across the benchmark curve also contracted at the short and long end, and that's due to the sell-off on the January 2026 and the April 2037 bond. But at the mid-segment, it closed in a flattish territory. Now, moving to the Treasury bills market of the fixed income market, the Treasury bills market, it traded also with bullish sentiment, and that's the average yield also contracted by 3 basis points to about 8.2%. Average yield across the benchmark curve of that market, it contracted, and that's because the investors demanded the 779 date to maturity bill, and then it closed at the mid and long segment flat. For the almost segment of the market, average yield was unchanged at 10.1%. Now, there will be FX retail sales for the market, and then let's talk to Chioma to give us more details about what's happening at the fixed income market as we speak. Thank you for joining us, Chioma.
Thank you for having me. Good morning.
Okay, now let's get started. There's supposed to be the impact of the FAC inflow, as well as about more than 5 billion naira OMO maturities. as well as the FX retail sales, which is supposed to be carried out today or on Friday. So can you tell us what's happening at the fixed income markets as we speak in terms of yields by investors?
Oh, well, we've seen depressed yields across the yield curve. This is as a result of the expected backing flow of over 500 to 600 billion coming this week. So we've seen investors and traders try to take position and try to, buy assets, especially at the short end of the yield curve. That has also, like you rightly said, moderated the yields across the curve. For the short end, you're trading around 5 to 6% on the T-bill curve, and the long end of the T-bill curve is about 7%. We've also seen some activity at the bond space where we've seen activities on the 37, 32s, and 29. That's also the bullish bias across the yield curve.
Okay, Choma, now the FX retail sales, which is happening on Friday, and that's as you financial markets will be closed, going on the Christmas break. So what do you expect for that market? Of course, looking at the money market, we saw that the Naira, it depreciated by 0.3% against the dollar at 452 Naira 67 kobo. So now what are we to expect for the FX retail sales later in 2 days' time?
Well, the central bank conducts the retail FX sales every 2 weeks for plants and raw materials, for petroleum products and airlines and agricultural products. We expect that the auction will still happen this week, and we expect that there's going to be a lot of bids on that space.
Hello, Choma. Can you hear us? Okay, well, I think we seem to have lost it. That was Choma Udu, fixed income dealer at GT Bank, telling us what... Okay, sorry, I understand Choma is back, so let's continue. Choma, please, kindly continue with your analysis of the markets.
So I'll say that we expect that the central bank will come in on Friday to conduct the retail auction. They conduct the retail auction across the sectors: airline, plants and raw materials, agricultural products, and petroleum products. This auction is mainly to help backward integration. Like you rightly said, we've seen a shift in rate to 451 levels. We expect that the spot rate at the auction will trend up to 490 levels, and then we expect that the central bank will continue to, intervene in that space to help liquidity, FX liquidity in the market.
Okay, Choma, one last question. Are investors in the, are they really, is the fixed income market that attractive for investors compared to the equities markets as we gradually wind down the year 2022?
Well, we've seen a lot of interest in the fixed income market, but like I always say, investors have different ways they want to close their portfolios. So you've seen a mixture of equities and fixed income markets. We've seen pressure, we've seen a bullish bias in that space because of the liquidity we have in the space. And then we're also seeing some activity in the equities market. So it's a mixture of two and how you want to balance the portfolio towards the end of the year.
Okay, thank you so much for that analysis, Choma. So that was Choma Udu, fixed income dealer at GT Bank. So there you have it. Yeah. She's spoken it all.
Exactly. Well, we still have some days. We'll see how the market goes.
Exactly.
All of the markets, not all just one of them. I'm happy that the unlisted market at least has a little bit of gain.
Yes, making some
movements.
Yeah,
even
though yes,
even though we're not back to that 1 trillion naira, but
no.
at least
I don't see that coming anytime soon.
All right, Anita, thank you so much for that. Now let's take a short break, and we'll be back for the crypto market analysis with Ladi Williams. It's the last lap for the program this morning. Ladi takes over. Ladi, good morning.
Good morning, Ini. Still here, still fear.
Still 29. What happened?
Well,
there was no movement, or it went and came back?
Not much movement. It's still fear, in the market. And it looks like we might not see greed for a long time in this market. We've not seen greed this year.
No, we've seen greed at the beginning of the year.
No, beginning of the year, but after the war. No greed. Everybody's just fear. And which is expected.
The war is fearful.
Yeah, it's quite a fearful time.
Exactly.
If you look at it, there's 29 points. Let's flip over to the market cap now. We see what's happening there. $834 billion. That's down 2.93%. The market cap, total market cap for the market, Bitcoin, all the altcoins. And we see volume traded down 12.77%. And Bitcoin dominance there, moving farther away from the 40% level. We're seeing it at 37.90%. Let's look at the price of Bitcoin this morning. There's $16,851, still holding that level down. Some analysts are seeing, more downside pressure. But if this level is able to hold, we might see some kind of bullish run coming to the market at this time for the price of Bitcoin. Volume traded $18.86 billion. Let's look at the price of Ethereum now. Ethereum still holding on to that $1,000 level, that $1,211. That's what we're seeing for the price of Ethereum this morning. Holding on to that 1K level. It's up 0.16% this morning. See there, $1,211. Volume, though, less volume than what we had yesterday, $5.96 billion. Let's look at the top alts by market cap. It's all green. We're seeing some relief movements there in the market this morning. BNB there just marginally up 0.02%, and Cardano, the biggest mover, up down about 2.32%. So it's more like it's more negative sentiment we're seeing there. Let's bring in Rume Ofi now, financial market analyst. Hello, Rume.
Good morning, Larry. Good morning.
Morning, Rume. Always bright and ready for this market. Thank you so much, Rume. But it's still about the FTX contagion right now. And we got that information that Sam Bankman-Fried is opting to be extradited to the U.S. What does this mean for the case going forward, him being in the U.S.?
So the guy is trying to play funny. For me, it's a mixed feeling here, but I think he knows that the fire is going to be heavy in the U.S., so he's trying to make sure that he's not doing certain things that are not going to affect him really. He has been indicted, and he's saying that he's told the court that he wants to see he's supposed to agree to some extradition pending him seeing certain documents that indicted him. But he said that he's not doing that. He's not going to agree for extradition yet until he gets those, even though those documents, even though he's been charged with 8 count charges in the U.S., conspiracy for committing wire fraud, customers, conspiracy for committing wire fraud, lenders, conspiracy for committing security fraud, conspiracy for committing money laundering, and conspiracy for violating campaign finance. That is actually very big, the campaign finance, because this young man, young billionaire of the past, actually donated a large sum of money to both parties, amounting is the highest donor in the Democratic Party for the campaign, the midterm elections, right? Totaling almost about $40 million in the whole donation that he has done so far, as well as his executive. But it's been clear very well now that some persons are already returning his money, which means that they are going to at least go all in for the case and see if he can be extradited. But it's really, really tough one. We have not seen the effect of the FTX issue that has happened. We have not seen the effect yet. I'm going to be seeing a very tough Q1 and Q2. So it is very good that a lot of people brace up, but this is the very wrong thing that he has done. So I could imagine even Nigerians that are holders of FTX wallet have lost a lot of their money. I don't know if our own government will be able to hold break for them.
Right, and obviously, going into 2023, we're going to be seeing more contagion effects. That's actually expected at this time. Thank you so much, Rume Ofi, financial market analyst. Thank you.
Thank you very much, Daddy. Always a pleasure.
Yeah. So if we look at the top gainers counter now, we see XDC there, that's topping the counter, up 6.53%. And we see Deckard there, up 2.07% to $19.30. That was trading over $100 at some point, this year. So we're seeing, most of these prices hammered. And we see the XCN there, that's topping the losers counter, down 3.45%. So you can call it a boring market. It is, a single digit.
For now,
yeah,
for now. I mean, crypto
yeah.
is not naturally boring, but it's just unfortunate.
It's that time. It's that time to be bored.
Exactly. Let's just hang in on, and we'll see some movement soon.
Right.
Positive movement, that is.
All right. We'll see.
All right, Ladi, thank you so much.
You.
See you at 1:30
right,
for Business Incorporated. But this is where we draw the curtains on Business Morning for this Wednesday. I hope it was worth your time. That was the promise at the beginning, and I hope it was worth it. But you still have the rest of the day to go out there and make the most of it. I hope you do. I'll try and do the same thing. I'll see you at 10 p.m. the stock market report, and then tomorrow, 10 a.m. I'm Ini John McFarland.